Good
Okay.
morning, everyone, and welcome to Black Friday and Cyber Monday Trading Strategies. This event is brought to you by Timing Research and TradeOutLoud. David Kosmeter and I will be your host today. We have a great lineup of pro traders with us today. We have John Thomas of Mad Hedge Fund Trader, which you see right here, right ready to start his presentation, followed by Simon Klein, yours truly at 2 o'clock, Brian Miller at 3, and we have Brian from Alpha Shark Trading at 4 p.m. Eastern. Before we begin, let me remind you that all information provided today is for educational purpose only. It should not be construed as investment advice regarding the purchase or sale of securities, options, futures, forex, or any instrument of any kind. Trading involves a high level of risk and may not be suitable for all investors. You could lose money. So before deciding to trade, you should carefully consider your objectives, your level of experience, and risk appetite. Individual performance depends upon each person's skills, time commitment, and effort. Results may not be typical, and individual results will vary. You must do your own research and make your own trading decisions. John, thank you so much for accepting our invitation, and welcome to Black Friday and Cyber Monday Trading Strategies. And if everything's all set on your side, you have the mic.
Okay, well, thank you very much. It's always a pleasure to work with you. We've known each other a long time, so let's have some fun. I'm going to talk about best trading strategies for Black Friday and Cyber Monday, which gets you through next Monday, which gives you exactly 4 or actually 3.5 trading days to work with. And I'll spend a lot of time talking about what you do after next Monday, like what you do next month, next year, and over the next 20 years if you're interested. So let me get on with the show here. Why listen to me? Well, I do have 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, little brief vacation as a Marine combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 12 years publishing the Diary of a Mad Hedge Fund Trader. I am one of the founders of the modern hedge fund industry who's still living and breathing. Let me tell you a little bit about me before we get on. My family origins are very humble. Growing up the oldest of 7 children in California, I lived the all-American childhood, playing Little League Baseball and becoming an Eagle Scout in the Boy Scouts. Wasn't much to do in the old days in California but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiners, and one of the first papers I deliver is up there at the top, covering the Kennedy assassination in 1963. Didn't take long for me to find the stock pages. I bought IBM at $20 and sold it at $30, and suddenly found a far better way to make money than delivering newspapers from the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By age 17, I'd visited more than 50 countries and spoke 4 languages. Being good at math got me a full scholarship to USC, then UCLA. Graduated at the top of my class with a major in math and biochemistry, double major. And in those days, if you were good at math, you really only had 2 choices. You could either teach or make nuclear weapons. I was kind of sick of the school thing, so nuclear weapons sounded much more interesting. So they shipped me off to the nuclear test site in Nevada, otherwise known as Area 51. Oh, managed to pick up a Mensa membership along the way. As the war wound down, I became a foreign correspondent for The Economist. And when they learned I was good at math, they decided I should be covering the stock market. Up until that point, I'd been working for various government agencies, which will remain unnamed, learned how to fly airplanes and then jump out of them. And of course, in those days, doing research, as they called it, involved carrying a .45 caliber Sten gun, an old British World War II machine gun. After all my government efforts, all I got was a box of medals and the right to lead the local Veterans Day parade. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of Asia all the way to India. That's a World War II bomb that we used to find all the time in the Pacific When we got bored, we used to set fire to them, run like hell, and then listen to them explode. That is a dull Friday night on Saipan and Guam. I very quickly figured out you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund. I rapidly became the top performing hedge fund manager of the 1990s, bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to buy the hottest car, get to have your own plane to fly over whenever you want in Europe, get to go marlin fishing, and as a sideline, you collect vintage Rolls Royces. Started the Diary of a Mad Hedge Fund Trader in, that is 2007 now. Sold my hedge fund, got into the oil and gas industry. After making a killing there, I missed the stock market, started the Diary in 2008. And since then, I've averaged a 35.25% return for my followers every year. I now spend my days pursuing my first love, finding winning trade alerts, but now I do it from my 3 mansions in San Francisco on San Francisco Bay, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching them how to trade, and that includes you guys. If I can take $50,000 account, turn it into $500,000, there is more job satisfaction in that than I could ever get anywhere else. However, every silver lining has a cloud. Taxes, yes. If you make $10.5 million a year trading, you have to pay $3.8 million in taxes. And fortunately, I'm happy to pay that because it doesn't affect my lifestyle. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. The ultimate luxury is to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to wounded warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. Symbol there, TGT. Remember that one. That's a good one. So what is the smart money doing now going into Black Friday and Cyber Monday? They are running their longs in an interest rate driven melt up. Don't try to second guess the next tweet. Just close your eyes and buy every dip. Technology is the main sector that's leading. However, you don't do this blindly. You hedge out your downside risk with cheap put options, which are incredibly cheap now, defensive sectors, bear ETFs, and buying the volatility index. And by the way, when you buy the VIX, you want to do it through the options. You want to go long dated, like out 6 months, and you want to go way out of the money on strikes. VIX is trading now at 12. Buying a 20 strike probably is not a bad idea. We get one of those sudden, out of the blue, 20% drops like we got last year. Oh, and you want to buy gold and silver on dips for return to higher volatility next year, which we'll almost certainly get. If you're wondering why I'm so happy in this picture, it's because I'm flying a P-51 Mustang. That's a World War II fighter. If you don't know what a Mustang is, that is it. My friend Geraldine, who I try to fly at least once a year. Okay, the economy is in a global tailspin. If the China trade war continues to the max, a global recession is a sure thing. 40% chance of a U.S. recession in the next 12 months, 100% chance in the next 24 months. Big chunks of small U.S. retailing and manufacturing are going under, leaving a few giant winners like Walmart and Target, both of which are hitting new all-time highs right now. Trade war has spilled into Europe, slowing economies there. World is turning to negative interest rates, tells us that the worst is yet to come. A no-deal Brexit accelerates the downturn, throwing fat on the fire. All of the above has triggered a global collapse in interest rates. Essentially, borrowing money now is free. This time it's different. Return to quantitative easing is hugely positive for stocks. So is the global relaunching of quantitative easing. All stimulus anywhere in the world, no matter where it happens, eventually ends up in the US stock market because we have the world's highest yielding assets, both in stocks and in bonds. All of this will inject $2.7 trillion of extra cash into the economy and is the equivalent to 3 more interest rate cuts. When the world goes from QT to QE overnight, you want to go from risk off to risk on. Of course, I have my secret weapon to make all this work and make money. I have my Mad Hedge profit predictor. That's a market timing index, an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators 24 hours a day. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. And just before I started this webinar, our indicator was at 68, which means the market is somewhat overbought, but not wildly overbought. Last week, we traded as high as the 90s, and that was telling us that a sideways or down move was way, way overdue. By the way, a year ago, this was trading in single digits at 6 when we had that 20% meltdown. I'm not the only one using algorithms. I found this mega yacht on the Miami beachfront or Miami waterfront. Guess what it's called? It's called algorithm. So it's obviously working for more people than just me. Some 80 to 90% of all current trading is algorithm driven. This shows you how our algorithm has performed over the last 3 years. And you can see we have plenty of buy and sell indicators, more than enough to make quite a few round trips every year. This has been a real money-making machine, as it can be for you also. Now, these are the signals that our algorithms have been given over the last 6 months for the S&P 500. Buy here, sell up here, buy here in the summer. And by the way, we went 100% long down here in August, got out at the top, got back in again, and we've basically been running this long ever since, slowly paring away positions, whittling them away. Our year-end target for the S&P 500 is 3,200. That's about another 100 points or 3% from here. That will close out 2019 at an all-time high. And by the way, you're getting these signals from us every day if you're following our service. NASDAQ, same sort of things. A couple of round trips here, running along into the year end and in the final melt up. Our target there is about 9,000 points or another 1,000 points higher. Russell 2000, we only use on the short side. That's because in falling markets, small stocks fall about twice as fast as large ones. We had 2 sells this year, made good money on those, waiting for one more sell signal to go. Okay, missed this one. Microsoft, new high. You can see we've only got buy signals this year on Microsoft, and that is because it's in a long-term uptrend, which isn't going to quit anytime soon, could go on for years. Our immediate profit target is $200 a share, but we are long and very happy about that. Apple, also, we've been running longs there, and actually, we've been running longs in Apple since it was $10 a share at the bottom of the financial crash in 2009. And we've been, increasing, decreasing, increasing, decreasing. We've always been long Apple in some form or another in our long-term portfolios, looking for a $250 target on that. PayPal, we've been big in fintech, made a lot of money there, and we just went long last month in that, looking for another major move up. NVIDIA, of course, major hero there. We've been involved in this stock since it was in the mid-50s. We're now at 209, target there, 300, and of course, buy. algorithm is your best friend in these major long-term trends because it tells you when to increase your longs just when everybody else in the world is puking out their positions, which they were certainly doing 6 months ago. Boeing has been one of our favorite stocks. Bet you didn't know that Boeing has generated the most share buybacks and the most dividend payouts of any American company in the last 20 years. So getting it down here is a gift. We've been buying, selling every 30% rally and then going right back in again. Boeing 737 MAX is the problem here. It'll probably be back up and flying in the new year. Walt Disney, another big winner. We've been involved in this for quite a long time also. Got a major buy signal in the beginning of November, just before they launched the Disney Plus streaming service. They have a near monopoly in princesses. Of course, it's going to drive all you parents nuts. The kids love it. Disney's about to monetize every princess you've ever heard of big time. Bonds, interest rates are headed for zero eventually, or at least 1%, or at least so says the bond market, with yields as low as 144 in the fall for the US 10-year Treasury bond. Collapsing global economies are sending a huge flight to safety bid for American bonds. They also are among the world's highest bonds, highest yielding bonds. Guess who else in the world has higher yielding bonds than the United States? Answer: China and a handful of other bankrupt countries who overborrowed and overspent. Ever heard that before? Can stocks and bonds go up at the same time? Absolutely yes, as they have been doing for most of this year. In a liquidity-driven world, you have an excess of cash, a shortage of assets. All assets of all kinds are going up, at least in the United States, where we want to go. In the meantime, German bunds have plunged to as low as negative 90 basis points. Japan's gone down to negative 25 basis points. Those are the yields that we're competing against. So, of course, we're looking expensive at a 175 yield, which is where we are this morning. Global free money puts a high floor under all asset classes, but won't spur them to dramatic new highs either. That's why we're getting this slow grind up, up 100, back 50 kind of market right now. Here's the TLT, which we're also very active in. Lots of buys there, been playing it from the long side pretty much all year. Occasionally we do a short off of one of these spikes, and we're currently long and targeting 150 in the TLT against 139 today. Here's the yields. We were at 146, looking for a target of 133, and after that a target of 0. So plenty more to go there on the long side in the TLT. Foreign currencies, of course, you lower interest rate, that kills the US dollar. Suddenly the US is cutting interest rates far faster than any country in the world. The head and shoulders top is in. Japanese yen has taken off like a rocket, could rise another 10% in the next 6 months. Australia is poised for a potential 35 to 40% move, and I'll show you the chart on that in a sec. In Britain, the worst case scenario has happened with no deal Brexit, leading to a stronger pound there. Chinese yuan has been falling, but recently turned around. Bitcoin rally fails again. The downtrend continues there. I'm avoiding Bitcoin like the plague. So sell US dollar against everything is the lesson here. Here's your US dollar basket. You can see the top and the head and shoulders there. So look for another meltdown to go there. Australian dollar, this is our 10-year chart. It's trading at 67.89 now. We're looking for this to go up to 1 to 1. 1 Australian dollar equals 1 US dollar. And that is a 40% move. And the real driver on that will be the global recovery once we get this little mini recession out of the way. Bitcoin, yeah, that's a really clear downtrend we've had since June. At one point, it was up 400% on the year. We're now in the process of giving all that back. By the way, you have no unfair advantage in trading Bitcoin. All the people who mine these things, who create them, do. So you're trading against the pros here with a huge unfair disadvantage. Energy, global recession is ramping up fears about oil. At one point, we were down 20%, prompted by the China trade war. U.S. production soars to 12.3 million, on a way to 17 million barrels a day in 5 years. That's up from only 5 million barrels a day in 2005. So the U.S. is the major producer here. By the way, China, the world's largest marginal new buyer, has banned all U.S. imports. You would think the natural place for our oil to go is China, but they're not letting it in. Oil's had every geopolitical reason in the world to rise, like attacks on tankers in the Straits of Hormuz, but it's falling instead. Recession trumps war. Bottom line, looks like $42 a barrel in the cards. Long time, oil goes to $10 a barrel, as it will only be used for petrochemicals and plastics when the entire world transportation system goes all electric. So here's your chart. We've been trading this from both sides, both on the long and the sell. Thanks to our algorithm, it's been a big help here. And we're struggling to maintain the flat line on the year here for oil. Eventually, we think this collapses down to 42. Okay, we go back there. And here is your 20-year chart. And that looks like a major downtrend, which started 11 years ago in 2008. And like I said, eventually going to $10 a barrel from a high of 150 in 2009. And like I said, 150 down to 10. You don't want to touch any energy investment of any kind anywhere in the world, whether it's a stock, a partnership, a master limited partnership, or whatever. Precious metals are the ultimate hedge. Gold will break out to new highs as investors look for a risk-off, a flight to safety hedges once a recession gets going. Central banks have become the principal buyers of gold in 2019, buying some 371 metric tons in the first half, and that is double the 2018 rate. China, Russia, and Iran have been dominating purchases to avoid economic sanctions. Gold has a positive yield against the euro and the yen for the first time in history. That's because gold yields nothing, and euro and yen have negative rates. So yeah, positive yield. So buy every big dip in gold. I'm waiting for this current sell-off to end so I can jump back in. And that's me in the Istanbul gold market. I do tend to get around a lot doing the research on this newsletter. So we're seeing an upside breakout after this washout here finishes. It's really more of a long sideways movement. Final target in gold, 1920, the old high. That's up 43% from current levels. Gold miners, you want to see the same thing. First sign of recession, these guys are going to be off to the races. Been playing on the long side for the first half of the year, pretty much ignoring it for the second half. There is one other investment opportunity, and that is a sector of one. Tesla's total cumulative production will hit 900,000 this year and 1 million by January. Battery costs have dropped by 80% over the last 10 years and will fall by another 80% over the next 10. Second factory is under construction in Shanghai, a fourth in Berlin. They're bringing out their Model Y small SUV next year. And of course, they just announced the Cybertruck. U.S. electric car sales have risen from 0 10 years ago to 4% of the total car market today. That will be at 100% in 20 years. Tesla's already outselling all premium car brands in the U.S. combined, including Mercedes, BMW, Audi, and Jaguar, and has a 10-year head start. So the other guys will never catch up. Many countries and U.S. states have banned the internal combustion engine by 2030 or 2040. Tesla will become the world's largest car company within a decade, causing the shares to rise tenfold. They are already the largest car company in the U.S. on a market capitalization basis. Here's Tesla. We originally got in at $16.50 after the IPO collapsed in 2010. So we've already gotten a couple of tenfold increases, not just one, but two. And we think there's another 10-bagger to go. So buy Tesla on dips. And by the way, cars are pretty nice too. This is my latest purchase. It's the Model X High Performance with Ludicrous Mode, a bargain at $162,500. And if you own your own company right now, your company can buy the car and give it to you for free, and it's 100% tax deductible thanks to the Trump tax bill. This is my first Tesla. I've had 3 of them. Even the best design in the world won't stop a drunk driver on Christmas Eve running into the back of you. Did take the opportunity to completely take the car apart. You can see back here under the back seat is a 1,100-pound lithium-ion battery. In 10 years, that'll be a 100-pound battery, which will still get you a 300-mile range. Also look at the carbon fiber wheel wells here, the honeycomb. The whole car will be carbon fiber in about 5 years, cutting the weight by about 80% and greatly increasing the range. This is the latest offering, the Cybertruck. For $40,000, you can get a 250-mile range, and for $60,000, you can go 500 miles. That'll be available in 2021. They sold 200,000 of these in 3 days, almost beating the Tesla 3 record, which was 400,000 in 3 days. And I'm thinking of getting one of these myself so I can drive to Lake Tahoe on a single charge and haul around Christmas trees. Don't play with matches. You can probably do okay just buying all the stocks I mentioned above and forgetting about them. However, the reality is the conditions for these companies change every day. They are all viciously competing with each other, trying to put each other out of business. So if you don't get daily updates on the fundamentals of these companies, you could easily get wiped out, or at least see your money drop by half. Apple, for example, has a 40% correction every couple of years, usually in between new product launches. Today's big winner could instantly become tomorrow's loser. That's why you need somebody like me to guide you through the thicket and avoid an out-of-the-blue blow-up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from a complete beginner to a seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. And that's me trading from the coast of North Africa. I'm smiling there despite the fact that it's 125 degrees. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds, and we have literally thousands of people doing this. The harsh truth is you really need my help. Majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. Easy solution to that, become one of the educated people. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why is that? Because dead people never sell. Not a bad skill to have when stocks go up on a 20-year view. In fact, on all 20-year views in history, stocks have always gone up. By the way, that's me having a little chat with Pinocchio in the factory he came from in northern Italy. Yep, that's a great story he told. You need a real pro to guide you through the market maze. The market is not monolithic. 95% of it can be completely ignored. Ignore the useless stuff, focus on the 5% that's really making money. There are a few great sectors, a lot of awful ones. You can earn 10 times return on the great ones, get wiped out by the losers. Let a 50-year veteran like me steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. Just to show you how well we've done compared to the main market, in the last 3 years, the S&P 500 is up 59.44%. We are up 113.77% with our Trade Alert service, and that is double the S&P 500 with a lot less volatility. No 20% pull downs here. The worst we ever get is maybe a 4 or 5% drop before we get another one of these huge surges up. Bill was a struggling tobacco farmer in Virginia who wanted to supplement his fading agricultural income. After making $3.4 million with the mad hedge fund trader, He still farms, but now he's growing grapes in California's Napa Valley for the high-end wineries. Philip was tired of working in the boom and bust of the oil and gas industry in Texas. After doubling his money every year for several years, he now earns a generous living as a full-time trader. Philip now trades whenever and wherever he wants, says he's never lost money on one of my trades. And Jackie was an Australian hospital administrator who turned $50,000 into $2 million with my help and became a major player in technology stocks. She retired in her 50s, now spends her time cruising around the world. She told me that she was making so much money, her husband wouldn't let her leave the bedroom where the computer was. He just kept shoving dinners under the door and said, "Keep trading, dear." So what do we do from here? Well, stocks, you want to buy all the dips, sell the major rallies. Bonds, you want to buy dips. Commodities, stand aside. Energy, stand aside. Currencies, sell any US dollar rallies. Precious metals, you want to buy the dips. And by the way, we update this view every day of the year. So if you're not up 49.6% this year, as I am, you are reading the wrong newsletter or following the wrong trade mentoring service. This is our 2019 year-to-date, up 49.46%. And this is a typical type trade fund, hedge fund type performance. When there's nothing to do, we flatline. When we see these huge meltdowns in the market, we jump in, catch enormous profits on the recovery, and that is worth 49.46%. Actually, to update this through today, we're up 51%. And you think I was just lucky this year? Here's our 10-year view. And again, no major pull downs, just a steady move up and an almost perfect 45-degree line. We're absolutely at the top end of the channel right now. That gives us an average return of 35.25%. You get those kind of returns, you get to do certain things that other people don't do, like sail on the Queen Mary in the owner's suite across the Atlantic Ocean. That's a 2,500 square foot apartment, two floors, 5 rooms, and you get 2 butlers for the whole 1-week trip. When you get to England, you can then take the Orient Express to Venice. First class all the way. You have to wear tuxes for every dinner. And you don't have to worry about traffic anymore. You just charter helicopters whenever you need to cross town and save tons of time every day. So here's the very long view, and this is the most important part of this presentation. This is where the big money will be made over the next 10 years. The 2000s and 2010s were the hard decades for making money. The 2020s and 2030s will be the easy ones, as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade, starting in 2021. And that's me watching climbers come down from the Matterhorn. I usually try to climb it myself once a year. It's a lot harder than it looks. So are you ready for a replay? This is a chart of the Dow average from 1982 to 2000. It went up 20 times in 18 years. I traded every one of those days. I remember it well. And guess what? It's happening again. This is the Dow average from 2009 to the present. If we go up 20 times from the 2009 bottom in 18 years, that takes us to Dow 120,000 by 2027. And if you think I've been smoking California's most popular product or hitting the bottle too much, let me tell you where we are now on this chart. We're already halfway there. We have gone from 6,000 to 28,000 in 10 years, and we are about to go up another 400% in the next 10 years. 400%, 28,000 Dow, that gets us easily up to about 120,000 in the index, and you need a service like mine to help you participate in that entire move. Otherwise, you'll panic and puke out at every sell-off, and then you'll chase every rally, end up buying tops, selling bottoms. It's a perfect money destruction machine. I know a lot of you have all been there. Except this time it's different. We now have a super turbocharger of technology. You know, technology is hyper accelerating on all fronts. Development of functional quantum computers mean that computation ability is about to increase 1 trillion-fold at no cost. World's major computational challenges will be shortly solved, such as weather forecasting, cancer cures, and yes, stock market prediction. All major human diseases will be cured within 10 years. Live another decade and you'll have a shot at living to 150. Needless to say, tech and biotech stocks dominate this scenario and even account for the bulk of stock market gains in our lifetimes. 90s had cheaper computers, cheaper operating software, and a new internet. The 2020s will have 10 times the number of technology drivers for the stock market. So who will show you how to play the next 95,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 49.6% in volatile markets. Follow my research and market beating trade alerts and you will rake the profits in. And by the way, over the 2-year period that the Dow average had zero return, that only ended about a month ago, we were up 165%. So let a Marine combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical trading month for us. You can see here we bought the S&P 500, made 16.3%, sold short US Treasuries, up 8.6%, bought the Russell 2000, bought Amazon, bought Apple, bought Biogen. Oops, we stopped out due to an unfortunate presidential tweet about drug pricing. We stopped out very quickly. It's easier to dig out of a small hole than a big hole. But then we jumped right back in with Palo Alto Networks, the Japanese yen, the TLT, the SPYs, and gold again. So 10 out of 11 trade alerts, that is a typical month. And this has been our average return for the last 12 years. With China trade war eventually end, just a matter of time before stocks break out to substantial new all-time highs. Watch this space melt up going into the end of 2019. Get ready to start wheeling in those whoppers with Global Trading Dispatch as your guide. Yes, that is a 24-inch trout that I caught in Pyramid Lake in northern Nevada. Here's how it works. We find a trading opportunity setting up with our algorithms. We send out a trade alert. In this case, it was Micron Technology when it was trading at $42.01. We send out a trade alert like this. It says buy Micron Technology at $42.01. It's an opening trade, portfolio weighting of 10%. Number of shares you need to buy for a $10,000 exposure is 238. What happened after this? Micron shot up. We saw a potential double top setting up there. So we sent out another trade alert. This one says take profits. Sell Micron Technology at 48.58 or best. That's a closing trade. And on this one, we made $1,563 in 15 trading days. That is a 15% return, not bad. Most services love to get you into stocks. They forget to take you out, leaving a lot of people stranded with positions they don't know what to do with. Here's some of our big winners in recent years. NVIDIA, we recommended at $68. It went up 267%. Lam Research, we recommended at $135. It went up 77%. Baidu, we recommended at $12.50. That's up 2,240%. With my Global Trading Dispatch service, you get a daily research newsletter. You actually get 2 letters a day, a morning hot tips and a afternoon deep research letter. You get instant trade alerts sent out at market sweet spots, about 200 of them a year, and all the reasons to execute them. You get live bi-weekly strategy webinars like this one, with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world. I do about 25 lunches a year, more educational videos and webinars than you can consume in a lifetime, and access to a 12-year database on investment ideas, searchable by names and ticker symbols. I'll even tell you where to find a great surfing camp in North Africa. Warning, it's harder than it looks. Here's what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay it because I make them millions. And I'm not going to charge you $10,000. That's what I charge my concierge clients who get my personal cell phone number so I can act as their investment 911. And I'm not going to charge you $5,000. That's what I charge my advanced option trading clients. And they're happy to pay that because they make fortunes also. And I'm not going to charge you $3,000. That is the cheapest price on my website and the lowest price I've ever offered on my website. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry running it cost me millions more. 6 months for just $999. This is a massive discount to our regular price. Just click on the chat box on the right, I believe it's on the right with Zoom, and that'll take you to a dedicated sales page, which you can only obtain through this webinar. You can't go to my website and get this price. To get $9.99, which is 2/3 off, click on the chat box on the right. This is a limited time offer. We only take 25 new subscribers at a time. It's kind of an exclusive club. We don't want to overwhelm the market with a bunch of new trade alerts making bad prices for our existing subscribers. Don't want to get too many people chasing the same stock at the same time. So it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the link on the chat box on the right. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. Okay, so moving on here. If you buy today, if you join us today, I'll give you a copy of my best-selling book for free, Stocks to Buy for the Coming Roaring 20s, and we are going to have a Roaring 20s in the next decade. You can either buy it in the store now for $49. It will show you sectors and stocks that'll lead the market for the next 20 years, or you can get it for free for signing up for my service at a 2/3 discount to the regular price. When we said this was a Black Friday, Cyber Monday presentation, they weren't kidding. I'm trying to beat Best Buy with my discounts, and I'm succeeding. Also, if you subscribe today, you will immediately get a trade alert that you can execute right now. Okay, just let me check the market, make sure you can execute it. And the answer is yes, you can. And let me check my email, see if anybody's bought yet. And the answer is yes, they have. In fact, we have just gone through the first 15 of our 25 offering. So if you're interested in our service and you buy now, you immediately get a trade alert to execute this second. Prices are still good. I just checked them. 90% probability of success. And you can make some of the most serious money in your life. Don't leave good money on the table. And just to tease you a little bit more, here is the chart of the stock I'm recommending, except I took the prices off and the name off and only left the dates on the bottom. So you have to go through 1,000 charts to find one this good. This is a major upside breakout. What are you going to do with this? Is this a buy or a sell? To find out, you have to subscribe to our service. Let me do the heavy lifting for you. So that's it, pretty much it. And who's running the webinar at this moment? Is it Anka or is it you, David?
Both of us are.
Oh, great. I get to choose.
Yeah, we're both here.
Okay, I just had a Bill sign up from Miami Beach, Florida. Bill, maybe that was your yacht, the algorithm. We've had Mary from Northbrook, Illinois. I guess that's a suburb of Chicago. We've had Roger from Tacoma, Washington. Roger, look forward to working with you. We've had a David from San Diego, California. I bet you're ex-military, David. Semper Fi if you're a Marine. And let's see what else we've got here. Yeah, we have more sales coming in. So does anybody have any questions? If anybody come through with questions, we have about 5 more minutes of free time to go. David, Anka, have you seen anyone come through with any questions?
I'm not seeing any questions yet. Hey, everyone listening, could you put like a yes or a 1 or something in your chat box? Make sure you're seeing the chat window.
See, maybe I can get on it. Let's see. Okay, here's a little orange box. Okay. Okay, here's a question. Is the service for stocks only, or do you also cover options or ETFs? The answer is all of the above. Every trade alert we send out has a recommendation on a stock to trade, an option trade, or an ETF you can buy. That way people can tailor the trades to their own experience level and their own risk management tolerance. Okay, another question here. When do you think the recession is going to start? It's almost 50-50. We start at the end of next year or the year after. Almost certainly a recession in the cards. There are literally hundreds of economic indicators flashing recession warnings right now. So this current run we're having may be the final one of the whole 11.5-year bull market, okay? Another question here. Are you an algorithm? No, I'm not. If you come to one of my strategy lunches and you pinch me, I'll bleed, but you might get a punch in the nose. So take your chances with that one. I am not an algorithm. I am a live human. I may be one of the last live humans working in this business. Okay.
I've met John in person a few times now, and he is a real person.
That's right. Yeah, so I have David here to vouch that I am not a robot.
Right.
Anka, I look forward to meeting you in person next time I'm in Florida.
Absolutely. David and I were actually thinking maybe we can do a live event sometime here next year.
Yeah, well, I'll do a deal with you. I'll go to your live event in Florida, and you can come to my live event at Lake Tahoe, Nevada. And
Awesome. Sounds fantastic.
I can guarantee you the weather will be better at my event than your event.
I don't know. We'll see about that.
Okay, let's see. Any more questions here? Let me just scroll through these. Here's one. Do you do just options outright, or do you do more advanced option strategies? The answer is we offer both. We do both calls, call spreads, put spreads. Obviously, the people who only bought calls for the last 10 years made the most money. If you do call spreads, it limits your upside, but it also limits the risk and the amount of money you have to put up front. So some market conditions, like the ones we had in 2009, 10, 11, that was a call-only market. These days, we're in a call spread market because the markets are showing much higher risk and much smaller gains. You're not getting these giant 10, 20% a quarter moves like we used to in the old days. Okay, anything else? Okay. Okay, well, I am pretty much done for the day. David, I'm going to turn this back to you.
Okay. Yeah, just turn off the screen share and just hit the share button again. I'm going to stop the recording.